I'm gonna record it. I'm gonna record this so you could replay back if you need to later on.
Got it.
All
Okay.
right. So what general questions do you have so far? It's more for you and what I could help you out with.
I know, right? Okay, I think if I could understand the concept of what I'm doing would be very helpful. I did watch some videos again about just like selling calls. And I understand when I go, hold on, I'm trying to log into this little thing here. When I go and buy a call, I want the stock to go up and then I sell it. If I go in and buy a put, I want the stock to go down, then I sell it. I get that concept because I do that, every day.
Okay.
I think it throws me off. I get really thrown off on the concept of what I'm doing, when you give your call outs. And I know your call outs are great. I just think sometimes I don't know what I'm doing and I worry, what if he's gone out of town and I can't get him and the stock market did a really crazy thing? Then I don't know what to do. Like
Yeah.
do you know what I mean? Like, I'm like, I don't know. I
Yeah.
just don't think I understand the concept of what I'm doing. I mean, I understand now if I go and sell a call, I got the concept of I want the stock price to go sideways or down, if I understood right.
Yep.
Then
Exactly.
I'm like, well, what do I do? Just go back in and buy it because I don't want the shares. And I don't understand if I really actually have to have those shares to do it. So I think that's
Right.
just for my confusion.
For the call side, if you wanted to just simply sell a call and not have the position already available, you need the highest level option clearance for that because that's a naked call. So that's a bit risky if you don't own shares of stock. If you do own 100 shares of stock and then sell a call, that's called a covered call. And that's a good conservative way to make a good amount of money.
But you need to own that stock, right? Like if I wanted to right now, say I accidentally was in the call side. Instead of hitting buy, I accidentally say I hit sell, saying I would be naked if I didn't own it, but I would be covered if I did own stock.
Exactly. Yes. Now, selling a naked call is very dangerous because if the stock price just shoots up way past your call, you technically have an infinite loss possibility. Because what if you sold a call at 20 and the stock's at 200? You'd lose a lot of money there, right?
Yeah, I just don't want to do anything I feel like my next level is what you're doing. But it's just trying to understand what the heck I'm doing.
Okay. Let me share my screen a little bit so I could explain some of the reasoning behind why we do some stuff.
Yeah, and then the other thing is I may go in and I don't know, into my interactive brokers and purchase or do whatever one of your calls is just to hold. I can't,
Right.
not sell it, just to hold though.
Okay. Yeah, there's nothing wrong with that too. I mean, you could use these trades in different ways if you feel that the stock is, when I do a recommendation, I'm pretty confident the stock will not continue to drop a lot if it's selling a put. So you can feel free to do other strategies with it, like buy shares or short shares if you think. So let's look at some of the recommendations we did for today. If you look at Fubu, I said to do a 128 cash secured put. So that means we're selling a put at 11 strike price for 0.22, right?
Wait a minute, I'm looking at what you put in. This was under option trades.
Yes. That's where I'll always post the days trades that I
I
recommend.
see January 5th.
It says option trades for 107. I posted it yesterday at 12:30.
Oh, yes. Yes, I'm sorry, 107. Okay, Fubo. Yes, I see it. 128 at 11. Yes.
So look at the chart that I have here. This is the stock price from, I usually do a 3-month chart. So the time frame, 3-month time interval, and then I go daily to see the stock price each day from there. And you could see that, let me move myself a little bit. If you could see that around October, it was around 25 or so. It hit a high all the way at 35, and then it hit a low of 13.18. But I'm feeling that it dropped so much. And then if you even look further back into like a year time frame, it hasn't gone lower than this current low all year. So what we're
Okay,
thinking is there's a very good chance that it might hit a support level at 13 possibly, because again, it never went below 13 in a year. So we're going to try to go even safer than that and sell a put all the way down at 11, which I'll just make a drawing right in this blue line over here, right? So by doing this, there's a pretty good margin of safety here because the stock would have to drop another, current price is 14.12 and it's pretty flat today. The price would have to drop another 3 points in about 3 weeks or so, because 120 is 3 weeks. And there's a pretty low probability chance of this happening, right? At least
okay,
in my view. When you look at when I said delta 0.12, that's about a 12% chance that it's actually going to be below that 11 strike price. So that means that the odds are in our side. We have about an 88% chance that it's not going to go that low. Does that make sense so far?
okay,
Now, when you look at the option trades, this is on Thinkorswim. Your brokerage will look very similar. Right now, the bid price is 0.18 and the ask price is 0.22. Most of the time, you could get in between this. So if I wanted to, I could probably get around 0.2 or so right now. So I'd place a limit order for 0.2 to sell a put. Okay,
so selling a put,
go ahead.
you want the price to go up?
You want the price to either stay where it is, go up, or even go down a little bit. Is still okay as long as it doesn't go below the strike price of 11.
Okay, hold on, cannot go below, cannot go to 11 or below 11?
We really don't want it to go below 11, but if it happens to go below 11, then you would be buying 100 shares of stock at $11. Okay.
Mhm.
So we do get it for a discount if this is a decent long-term buy that you would want anyway. Some people do this simply to get stocks that they want at a lower price than the current price. And they're not even worried too much about how much premium they're collecting for it.
Okay,
But by doing this, you could make, let's say, $20. So you're getting a $20 premium. You have to put up 11. It's really 11 times 100. So you'd be putting up $1,100 in your brokerage for your buying power, which ends up being a 1.8% return. You can just multiply that by 100 to get a percent here. The easy way to do it is just start with your $20 that you collect, divide by 11, and don't bother putting in 1,100. That's how I do it to see what the percent return would be. So you get a 1.8% return in about 3 weeks. That's if this option does not go below 11 at the strike price, at the expiration date. Okay.
okay,
And actually, you do collect this income immediately. So your buying power would be down $1,100, but you would collect the $20 in premium. So your buying power would actually be 1,100 minus the 20, or be $1,080. And you could do whatever you want with the premium right away. Okay.
okay,
So again, what I look for in general are positions where I don't think it's going to get to this really low number. And if we
okay,
look at a few other positions like AMC, I did that one yesterday. AMC is currently at 22 and almost $23. We're putting in a bid for $16. That's lower than the chart even shows.
okay,
This is the 3-month chart, and it never even came close to touching 16. Sometimes I look a little further out. In the yearly chart, you might remember last year and around January, it was really low, but ever since around August, we've been in the 30 to 20 range, right?
mm-hmm,
So that's why I wanted to pick a strike price that's below these numbers, because I want it to be a pretty high percent chance that it's going to work out in our favor. and then we get to keep the premium that we had. Okay.
Okay.
So you could simply do those recommendations and then leave them until they possibly might expire worthless. There's nothing necessarily wrong with that. What I like to tend to do is lock in some of the profits when possible. So when you
Okay.
looked at that AMC trade, we were initially getting $30 in premium per contract, but then I put buy to close at $15, right? And the reason why we do that is, again, you lock in your profits, we'd be getting 50% profit there. It's just 30 minus the 15. And then we also get out of the position early, so they'll let us possibly do new positions in the future quicker, right?
Mm-hmm.
Again, there's nothing wrong with waiting that whole time until the option just expires worthless, and then you can just do another one afterwards. So if you want to feel a little more comfortable that way, there's nothing wrong doing that. Okay, what questions do you have so far on that?
Okay, so as soon as we sell this put, we go ahead and do the opposite and
Yeah, if you wanted to
Right.
get out of the trade,
Right.
we'll do a buy to close order.
so yeah, you kind of just go ahead and do the buy to close, because if you're not monitoring it and
Yes,
something happened, you could be owning like these shares and you're like,
yes,
oh crap, I didn't want to own all this, right?
right. So when
Okay.
you're doing that, you want to do a buy to close order and also do good till canceled. So you don't have to do that every day, and it just stays as a possible closeout.
So what if I share my, so aren't we
You can share your
trying to
screen
get
if you want.
those spreads to get closer together? Is that also what you're trying
All
to
right,
do?
you want to go over credits? We'll go over credit spreads real quick.
Let
Do
me
you
do
have
that.
the option clearance for it to be able to do them?
I can on
Interactive, I think.
interactive brokers, yes.
Okay. So here's how you set it up for the Apple recommendation for today. Right now, the stock price is 172 and change, pretty flat on the day.
Mm-hmm.
And what we're going to do is a PCS is a put credit spread. We'll go to 218. The first number says 150. That is the put price that we're going to be selling. Okay.
Mm-hmm. Mm-hmm.
So I'm going to sell the 150. Now, if you happen to have enough money for this, it's a lot of money. It'd be 150 times 100 or $15,000. You
I
could
don't,
simply sell that put if you wanted to, right? But that is a lot of money. You would receive $125, but you're putting up $15,000. You're not even going to get 1% return for about a month and 2 weeks, right?
well, wait, let me ask you, if this count only has, say, $1,700 in it,
Okay.
am I gonna be able to do?
But then you could do then you could do the credit spread. So
Okay, gotcha.
first going to sell the 150 put.
Okay.
Then we're also going to be buying the 145 put. Okay. So I'm going to go to
By the same strike price, right?
going to buy the strike price in this case that is $5 lower than the sold strike. Okay.
Oh, okay, so we gotta go to the 145.
So then you want to go to the
Okay.
145 and buy that put. The reason why we're buying that put is it's a bit of protection, because remember, if you just sold a 150 put and the stock goes to 20, you'd be down a bunch of money. But by buying that 145 put, you do give a little bit of insurance, because the maximum loss you would take is only $500 in this case, because that's the difference of these strike prices. If you do 150 minus 145, you'd get 5, right?
Mhm.
And this would only take up $500 in buying power instead of the $15,000, right?
Yeah,
So
right.
do you want to try to set it up in Interactive Brokers? You can do it as a
Yeah,
paper
let's
trade, just
try.
to make sure that you're putting them in right.
Okay,
So if you don't mind sharing your screen when you're ready.
yes, and I have one, two, I'll have to pick my screen. Uh, this one.
All right. Again, I'm not super well versed in
Can you-
interactive brokers, but we could figure it out.
Can you see my screen?
Yes.
Okay, so this one was AMC we were discussing. Okay, so I'm coming over to, what date did you talked about, February 18th?
Do you want to try the put credit spread or the cash secured put?
This count only has $1,700.
Let's do the cash secured put. Let's go to Apple instead.
Oh, I'm sorry, I don't know why I put AMC. Yeah,
No, we
Apple.
talked about AMC right before that. It's okay.
Okay, yeah. Like, wait, what am I thinking?
All right, so Apple, yep. Let's
Oh,
go
I don't like
to
when it.
218's date.
Sorry, have to put in stock. Okay, so I'm going to let it load. February 18th.
Yep. All
We're
right,
going to 150, right?
so go to 150. You want to sell the 150 put,
So I got sell.
and now you want to add on buying the 145 put.
So I never know, this is hard, quantity wise.
That's just how many contracts you're doing. You can keep it as one.
Just keep it at one, okay, and then what price?
I would just keep it at the midpoint right now. It's only within $1, so
So just
128.
select mid, okay,
Now you gotta add, don't just submit that. We gotta add buying a 145 put. It might be under the advanced column in the tab there. I'm not 100% sure on interactive broker.
oh, it's under, hold on. They have a thing called strategy builder.
Try that.
What
See
is
if
this
there's,
called that I'm doing? Oh,
It'd
I'm sorry,
be-
I forget you.
it would be a vertical spread. Click vertical spread. On the
Do you
very
see
bottom.
that? Oh,
Very
at the bottom. Oh, okay,
All right,
got
click
it.
on the 145 put.
I don't know what to do with this. Okay, 145 put.
Yep.
God, I have no
All right,
idea.
so now if you look at that strategy builder, leg one, you're selling. Oh, it changed it. Okay.
Or do we need to fix something?
Can you click on the 145? Yeah, click that and see if you can make it 150. All right, and now the buy, click 145.
Wonder why it did that.
Maybe because it was the first button. I'm not sure. All
Okay,
right, so
no,
now when you look at it, you're selling the 150 put, and we're also buying the 145 put at the same time, right?
mhm.
That is the way that this is exactly how I put the recommendation in for today.
Okay,
And then you see in the bottom, the midpoint is about point, it says negative 0.38, negative 41. I said negative 0.4. So anywhere around there is fine. What this means is if the trade works out, and the way that the trade would work out is Apple doesn't go below 150 before by February 18th, then you would make the $40. Okay.
okay. I know it's supposed to possibly drop to 160. I've heard them talk about, to fill for the gap fill,
Oh yeah.
but then
And their
that's it.
earnings coming up too, though. So earnings are on
Oh.
127. That's why I said to probably get out of it right before that.
Right before, when was their earnings? The
January 27th.
27th.
Yeah.
Oh, so we need to make a note to,
Yeah, I would make a note to probably get out of this trade right before that on the 26th. And I'm
okay,
pretty sure if Apple doesn't tank in the next 2 weeks, you could probably get out of this for maybe $20, $25. And then you'd just get out of the trade and then do another one after.
okay, cool.
So this is called a vertical credit spread. Notice when you clicked on the 150 put, see what it says for delta?
Hold on, sorry, for the 150, yeah, the delta.
The delta is
what-
point, 0.11, right? That's a pretty safe trade, in my opinion. It's essentially the probabilities are showing Apple has only about an 11% chance it would get that low, or it would be a 90, almost 89% chance it won't get that low, right? So this is a high probability trade that's most likely going to go in our favor, right?
Okay, okay,
When I'm doing these vertical credit spreads, I look to have a delta no more than around 0.12 or so. So usually I want to go 0.08 to 0.1 or so, because I want the odds on my side, and I want to pick these prices that are really far away that are unlikely to happen, right?
Okay.
What questions do you have on this?
Nothing right now. And when when you give these out, like you gave them out last night, sometimes I might not enter them until then, like later today.
Uh-huh.
Is it okay just to let it give me the price? Like we're looking up here, it says 42.38.
Yeah, if the stock price didn't dramatically move from when I made the recommendation to when you're putting them in, it's
Yeah.
usually okay.
Okay.
If you see Apple like up 5% today, then you probably should just DM me and say, is this still a good trade or not? And even worse, if Apple drops, say 10%, then you should definitely ask, because it's probably not a good strike anymore.
Okay.
But yeah, if the stock's within, 2-3% of what I said, it's probably still a good trade, because right now it's at 172. We're going down to 150. That's a pretty big buffer that we have, right?
Mm-hmm.
172 minus 150 is a $22 drop, and $22 divided by the current share price of 172, we're looking at almost a 13% drop in order for this to be in the money. Apple is pretty unlikely going to drop 13% in about a month, right?
Right. Right. Yeah.
Yeah, these are the type of trades that I like to do a lot of, because it uses a lot less buying power. You're only using $500 to make $40, right?
Yeah.
So think, like, even if it wasn't an earnings play, just assume it was no earnings and we let it go, you'd make 40, divide it by the 5 for $500. That's an 8% return in about a month and a week, right?
Yeah.
And that's
I
a good
need,
return.
yeah. I need that. Yeah.
So that's why I try to do very high probability trades that's going to go in our way to earn the returns that we're trying to get. And the returns I'm trying to get is close to 1% a week. I'm happy with 0.66, 0.75% a week if possible. So if this trade ends up, being $25 and next Friday, let's say Apple goes up a bit or stays pretty much where it is, you could buy this back for less, and then you would keep that 15 or so dollars in a week's time, right?
Yeah.
So just
Okay.
imagine doing these things with many, many trades and more than one contract, especially as your account builds up. And that's a good, safe way to grow your money.
Yeah. I'm gonna try to do that with this particular account and see how it does with the stuff you're doing. So right now, this price
You could
is
try the
the,
middle and try for 40 and see if it fills or not. If not, then I'd wait about a minute and then go down to 39, go down to
so
30.
this, is it this one we're doing, the 40? Wait, no, that's price.
I would just click submit if you want to do this trade on the very right.
And
It's
I don't need to put good till cancel?
It won't matter. You can do day. It's gonna fill pretty quickly. Apple has a lot of volume and open interest. There's a good chance it might fill immediately.
Oh, you must have at least,
Oh, 2000. Okay. Yeah,
oh,
that's a financial rule. Once you have 2000, you could do the spreads.
well, I deposited it, but then now it's gonna take,
Yeah, you gotta wait a few days.
you know what? Let me see here. Well, I was thinking I'd do it on my, oh, wait.
You have to have the proper option clearance to do these. And you need a pretty high level option. Like, I don't even have this in my Roth IRA. Like, I can't do spreads in my Roth.
But I've done this before on my other account.
You could try it and see if it works or not.
Let me see, I'll just do it really quick
Yeah,
here.
I only have a few more minutes because I have kids coming.
Okay, gotcha. If you, yeah. So we went to options, February just tell me when you're like, I need to get out here. February the 18th,
Yep,
we did the 150
sell it.
and it says 129 on the price.
Right, then click buy 145.
I'm gonna sell it. can you, is it called add an option leg? I wonder.
Probably.
Okay, 145. Okay, sell to open.
Yep.
This one doesn't say the right thing. Sell to open, and the other one says buy to close. 150 put is the sell to open. 145 is the buy to close.
No,
And
that's
it's got,
buy to, it's 145 buy to open also.
oh, buy to open. Thank
Yeah.
you.
What
Oh,
brokerage are you using?
this is TD.
Yeah, it'll say spread and it should say a parentheses for your credit. If you do it right,
Yeah.
say parentheses around $40.
Yeah. Oh, I don't know. I'm doing it not on the app, but it has the mid at 41. So I've got a 150 put sell to open. I've got a 145 put the same month
Mhm.
buy to open. And it's got right now mid price 41.
Yep, enter it and see if it fills or not.
Where he says put in your, okay, this.
And if it doesn't fill, go down to 40.
Oh, I don't have enough, but I guess I used all my money trading today. Well, crud.
Do you have $500 of buying power?
Well, I used all, I've been trading today, so I used all of my available
Okay.
money to trade. Yeah, this one's it's got a little more, bit more, it's got more money in it.
I just want to make
Uh,
sure you're able to do spreads or not, because sometimes you may not be able to. TD
Yeah.
Ameritrade is pretty good at giving you the highest options. And I
I
just
think,
placed one too.
I think I did this with you before.
Yeah,
And
we
I
did.
think,
We did just a cash secured put though. We didn't do the
oh,
credit.
was that different? Oh,
In the cash secured put, we only sell the 150. We wouldn't buy the 145.
okay. So this
But you
weird.
probably have clearance. You just gotta double check. If you had 500 minus 40, if you had $460 of buying power, you could have done the trade.
Oh, yeah. Okay.
And I know
Well,
TD's annoying. Like I put in money yesterday too because I wanted to do a different spread, and I have to wait until Monday because it's not going to clear yet. So annoying. They should just let me do it.
just like I'm good. Don't you know me? I'm good for this.
Yeah. Once you hit 25,000 or more, I think it'll let you because then you're not day trader rule.
Oh, I
But
used to have 20. I used to be up to 30,000, but I did some really stupid stuff. And then I just took everything back down to 10 and I said, no, until I can get my act together
good.
on these options, and I'm doing better now,
We're
finally.
we're doing safer stuff from now on. You're in a good place.
Yeah,
You can do
thank
what you
you.
want with your other strategies, but consider doing like at least some percent into ours.
Okay, just really quick. So we just did a credit, what'd you call it? A
It's called a
credit,
vertical credit spread. And that's
which,
technically a put credit spread because we're selling the put.
and then the other one I had done with you was called a what?
A cash secured put.
Gosh, that's where I'm like, I don't understand the difference.
That's when you put up the full amount of the money for the strike price. Like some people out there and some members in our group, they would sell the 150 put and that's it. They wouldn't buy the 145. And they're putting up $15,000 to do it. But it is a little safer in a way because they might want Apple at 150 anyway.
Mm,
And they feel that that's a good discount to buy the stock at. So they don't mind doing that, but they're only getting 1% in a month. Nothing wrong with that if they're, wanting it. Some
yeah.
that stuff all the time. Like if I had the funds for it, I'd probably sell a 160 or 165 right now because I'd like it at that price anyway.
I wish I could. Oh,
Yeah,
all
we'll get
right.
there eventually as our accounts grow.
Okay, maybe next week I'll get this set up.
Okay. All
Thank
right.
you.
Thank you. And I'll send you this recording when it's saved. Okay.
Okay.